The world is never going to be the same again.
I'm worried about the world.
The mass chaos and crises that there was in the world, it's going to be just like that now.
This is not an accident.
How long is it going to last? Longer than even for those of you that have some cash in the bank, way past your cash reserves.
Out of 100 people, 4 will get the message.
This thing isn't going to be over in a few weeks. This thing isn't going to be over in a few months.
This is the Rich Dad Radio Show. The good news and bad news about money. Here's Robert Kiyosaki.
Hello. Robert Kiyosaki, the Rich Dad Radio Show. This is January 2022. Because everything is changing so fast, people know what dates are happening here. And we have a very important show today, a very special friend. Peter Schiff's been a friend for years. We met together, the real estate guy's cruises, and I got to listen to him. And, you know, the definition of intelligence, if you agree with me, you're intelligent. So Peter's very intelligent. And we're just talking before the podcast started, is for years I've been like Paul Revere, you know, be careful, warning, the British are coming. I've been like Chicken Little, the sky is falling, and I've been a pessimist for all these years. But now I can't believe how bad it's gotten. I mean, it's here. And that old saying, cheer up, it could get worse. And what Peter says, well, cheer up, it's going to get worse anyway. It's worse than this. So it's a very important Rich Dad Radio show. And one more reminder is we don't make any recommendations. We don't tell you what to do. We don't say buy this, sell that, do that. That's up to you. But that's why you listen to us. Rich Dad's a purely educational show. And again, our special guest today is a longtime friend, Peter Schiff. Any comments, Kim?
Well, I'm looking forward to today and welcome, Peter. You're a dear friend. And, you know, one of the things I love about this show is we bring guests on who are actually people that are doing what they're talking about. And so a lot of times we ask people, what are you doing today to prepare? And so we're going to learn what Peter's doing to prepare from that vantage point, but also what's happening with inflation, with interest rates, because there's so much going on and it's changing so quickly. It's really tricky to keep up. So I welcome you, Peter. Thank you. And looking forward to a great show. I don't know if it'll be optimistic, pessimistic, but I know it'll be realistic. That's for sure.
You might be on suicide watch after this. And if it gets, the good news is this, if it gets worse, you still have time to prepare. And for full disclosure, I do invest with Peter in this Euro Pacific Fund. So welcome to the show, Peter.
Welcome.
Yeah, well, thanks, guys, for having me on. And, you know, the interesting thing is I'm not doing anything differently because I've been preparing for this crisis for a long time. In fact, a lot of people were making fun of me because I've been preparing for so long because they think that what I'm preparing for is never going to happen. Well, it's going to happen. It hasn't really started yet, but we're getting close. You know, the problem is the Fed's been operating its monetary policy while looking in the rearview mirror because they keep creating inflation, right? Printing money, quantitative easing, whatever you want to call it. And they keep printing more and more money. And they look in the rearview mirror and they look at the CPI. And as long as it's below 2% or some version of it is below 2%, they think it's okay to keep printing money. Meanwhile, they're ignoring the road ahead. They keep looking in the rearview mirror at these CPI numbers. And they kept, printing money and inflating asset bubbles and distorting the economy and leading to these debt bubbles and letting the government get bigger and bigger and bigger, spending more and more borrowed money. And then all of a sudden they look in the windshield and they're staring at these big CPI increases. And their initial reaction is, oh, don't worry about it. It's nothing. And then after a few more months, well, it's transitory. It'll go away. And now they've got this huge problem, which has been inevitable for a decade. In fact, back in 2009, when the Fed first made the mistake of going down this road of quantitative easing and 0% interest rates, I predicted exactly the predicament that they're now going into because they have this massive inflation problem. They can't do anything about it. They're talking about tightening up on policy, but what they're talking about doing is going from very loose policy to slightly less loose policy. They're not talking about tight money, which is what they would actually need to put out this inflation fire. But by tightening up a little bit, they're going to prick the bubbles, or they've already pricked the bubble, and you're seeing all these risk assets imploding right now in price. The economy is already rolling over into recession just because the Fed is supplying less monetary heroin than they were. But the fact that they're still supplying some means that the inflation problem is going to keep getting worse. So this is the Fed's worst nightmare. It's stagflation. And the question is, what are they going to do? Are they going to keep tightening up policy and push the economy into another financial crisis, not just a recession? Or are they going to reverse course, go back, reverse any rate hikes, expand quantitative easing, and just make the inflation problem much worse?
Peter, one second. We all know we're screwed. The question is, what if it's going to get worse? What do we do? Kim and I have been preparing for this for years and years and years. Like I said, I invest with you. Kim and I have tons of gold and silver. We do have Bitcoin, which you hate. But anyway, we also have bullets. We're ready for that. Okay? And Peter, we know we have a problem. We've been telling people for years. Kim, any questions for Peter on this?
Yeah, I do. And I just want to, it's a more minor question, and I do want to get to what you're doing and what people need to do. But when you talk about the CPI, the Consumer Price Index, which measures the price of consumer goods, you've said before that, that they change that formula all the time, right? So when they say it's 7%, it's actually a lot more than 7%, isn't it?
Yeah, well, 7% is the number that you get when you use their rigged methodology for calculating consumer prices. And they often compare the inflation today to the 1970s to try to make it appear like it's not that bad. Oh, yeah, it's 7%, but it's nothing like the 1970s. Well, it's actually worse than the 1970s. If you used the same CPI that was used to measure prices in the 1970s, and if you use that identical CPI today, last year was actually worse than any year during the decade of the 1970s. It was about 15%. And the bad news is 2022 is going to be even worse than 2021 because a lot of companies held back on price increases because they thought it was all transitory. Well, now that they realize that's not the case, you have a lot of companies that are rushing to make up for lost ground, and they're announcing major price hikes here in January. They're probably going to do more later in the year. Look at the price of oil. It's already exploding. It's up about 20% in the last few weeks. We're at a new high for the year. We're at $85 a barrel. I think we're headed over 100 this year, maybe closer to 150. I think by next year we'll be above 150 in the price of oil. It's not just oil. It's all sorts of energy, but it's agriculture. It's industrial materials. The government is trying to blame it on a supply shortage. It's not a shortage of supply. It's a surplus of money. It's all the money printing that is creating the problem. Had the Fed done the right thing after COVID and contracted money supply, then we wouldn't see these big price increases. Maybe there would have been a reduction in supply, but there would have been an offsetting reduction in demand. Instead, we reduced supply because everybody was staying at home instead of working, but we increased demand because we gave all the people who were staying at home more money to spend than what they used to earn when they actually went to work. So it was the worst of all policy mistakes. We threw gasoline on the inflation fire, and now we're dealing with the consequences, and it's just getting started.
So once again, the question is, what do you do? Because for Kim and I, Kim and I have been saving silver and gold for years and years and years. We use debt to buy income property. So we most of our income coming from real estate. We're not in the stock market, but we're preparing for the future constantly. Peter moved to Puerto Rico. I keep teasing him. I said, if you knew real estate, you would have to be in Puerto Rico. But anyway.
My best investment last year was my house and my condo here in Puerto Rico. I mean, people don't even believe me when I say this, but real estate has basically gone up 3 to 5x in the last year. I mean, you don't normally see that
Peter, all over the world, Peter. So
but no, you're talking quadrupling, quintupling in price for a house. So, I mean,
Peter, I understand. Peter, I don't play that stupid game. I mean, I think you know my formula. It's purely one thing: cash flow and don't pay taxes. That's my game. And I don't have to live in Puerto Rico to do that. I give Peter so much grief about this every time I see him.
But well, that's how you don't pay taxes, is you live here. But as far as
I could live in hell too and not pay taxes. I could live in jail and not pay taxes.
2022, we're off to our best start in years as a asset management company. Most of our stocks are hitting 52-week highs,
Peter,
even today, with the Dow down 500 points.
Peter, all we want to know, this is not the Peter Schiff show. I mean, I subscribe, I listen to your podcast all the time. You have a great show. You're very informative. You're very opinionated. I'm sure you piss off a lot of people like I do, which is good. The question is, if it's going to get worse. I was listening to Steve Hanke of John Hopkins University. He agrees 100% with you that it's money supply. It's M2. Just pure too much money in the system. But the question is, so what's going to happen? So if let's say they raise interest rates, they push us into a recession. That's going to crush a lot of small businesses, and if prices go up, there'll probably be more unemployment.
Yes. The problem is they're going to raise rates enough to crush the economy, but not enough to slow inflation. And in fact, as inflation gets worse, that's going to be another drag on the economy. And so what you've got to do, what I'm trying to tell you, is you've got to get out of all of the bubble assets that were propped up by all the cheap money. Because even though money is cheap, it may be slightly less cheap for a while, and that's enough to collapse the bubble. But you can't just go to cash, because inflation is very high and it's eroding away the value of your cash. There's no safety there. You can't buy bonds. Bonds are even worse than cash because it's cash in the future. But in the meanwhile, you're tying your cash up and inflation is eating it up. So people have to go out of these risky momentum stocks into value. And what we're seeing is a massive shift out of U.S. growth stocks to international value stocks in Europe, stocks in Asia, basic businesses that have real earnings right now, that pay good dividends right now. That's where investors are hiding out. That's why you're seeing some of these stocks up 10, 20% on the year with no news, even as U.S. tech stocks are cratering and all the bubble stocks, including the cryptocurrencies. All that stuff is going down. You got to get into real assets. You got to get into value. You got to get out of paper, and you got to get out of U.S. paper in particular, because we've got the biggest inflation problem that we can't do anything about because we're so loaded up with debt. There's no way to fight inflation without collapsing the entire economy, because the whole economy is built on a foundation of these artificially low interest rates. But in order to fight inflation, you have to remove that foundation. And then if you do that, everything built on top of it comes crashing down.
Peter,
go ahead, Robert.
No, I do not agree with Peter on this one. I don't like the stock market. And I think the problem is in the bond market. That's my concern. And the repo market, which is short term, as short as it gets. So I'm watching all this stuff. I want to know what a person can do. Kim,
I'm not in the stock market. I'm buying businesses. Now, the businesses are publicly traded, but I'm not just buying the market. I'm looking for companies that have assets I want to own.
Kim, so what have you done? Because Kim's done a fantastic job of tightening up the Rich Dad Company. We're lean and mean. We're more profitable than ever before. So what does a person do? I mean, I really hate the stock market, Peter. I hate it. It's manipulated as hell. I've taken 3 companies public. I'll never do that again. So
right,
Kim, so I'm not saying you guys shouldn't do it, but I'm saying don't think there's a panacea. The moon will rise over the horizon on this one.
Right, but when you think about a stock market, you're thinking about the entire market, an index. I'm looking at businesses. Like, let's say your company, the Rich Dad Company, if you went public and it was at a good valuation, at a good dividend, maybe I would want to own part of the Rich Dad Company. I could buy shares in your business. I want to own businesses. I have to get out of cash. But I can't own, the momentum stocks. I can't own these, high-flying companies that don't have any earnings. and I can't buy cryptocurrencies, which have no value or no earnings. They went up along with everything else. I want to own something real. So I own businesses, tangible companies that have property, plant, equipment. And I also buy real money. I agree with you there. Buying gold, buying silver, buying mining stocks. That's where people are going to go to get out of
Peter,
harm's way when it comes to inflation.
That's old advice. We've been saying this for 30, 40 years now. You and me.
Yeah, we've been right. We've just been early.
No, but we look like Chicken Little running around with our heads cut off. Kim, what have you done?
We're going to look like rich Chicken Littles because we're going to have all the money.
Kim, what are you doing to prepare for the future that's getting worse?
Well, again, of course, we're doing gold and silver. We're also doing real estate. And real estate, there's going to be changes in real estate with the supply problem and the all of that happening, people not working. But I'm putting a lot of emphasis into our company online. I mean, since this pandemic or plandemic, whatever you want to call it, happened, people were looking for answers. They were looking for education. They were looking for information, just like you offer, Peter. And so we put a lot of emphasis on delivering information throughout the world digitally. That's paid off in spades for us. So that's where a lot of our emphasis and to your point, we're also with our investing in other businesses of who we know the owners who are very, very.
Yeah, can I say one more thing, Peter? What's happening right now is for the real estate investors, we have too much money. It's shocking how much money we have in the tens of millions of dollars floating. We can't find a deal.
Everybody has too much money. That's the problem. But eventually,
Peter, not tens of millions. I don't know what planet you're from. There's not too many people with an extra 10 million US sitting in the bank right now.
No, but whatever they have is too much. People. The money that people have is out of proportion to the productivity. People are getting money. Not because they're helping to produce stuff. I understand. So what Kim and I, it's just being printed.
So Kim and I are actively in the market looking for bigger investments, but it's more dangerous simply because the market's about to crash. So when we come back, I don't want to give the old tried and true, go to school, get a job, get a 401k and a retirement plan and your life set. I think all of those formulas are going to go to hell. So right now is what you and I have for like 30 years have been saying this, but it's going to get worse. I agree with you, but I want to explain to people why it's going to get worse. Like Kim and I right now are panicking because there's so much money coming in because they printed too much money and there's other people with no money coming in or they got little money coming in. But it's going to make a big difference what a person does in the future. So what I'm saying is Kim and I are more cautious today than when we're highly pessimistic. So when we come back, we'll be talking more to Peter Schiff. Please remind people we don't make personal recommendations. I don't trust the stock market. I do have stocks, but they're my company. I control the company. The issue is control. And I think what you're saying, Peter, is how much control do you have over your finances and your money and your investments? So when we come back, our dear friend Peter Schiff. We'll be right back. Thank you. Welcome back, Robert Kiyosaki, the Rich Dad Radio Show. The good news about bad news about money. Today, screw it up. You can listen to the Rich Dad Radio program anytime, anywhere on iTunes, Android, and YouTube, and please leave a message. And all of our programs are archived at richdadradio.com. We archive them because we're a purely educational company. We make no recommendations. I hate it when people say you said to buy real estate or buy gold. I'm saying this is what I do. I'm not saying you should do it. But most importantly, we're an education company, and repetition is the way you learn best. So if you listen to this program again, you might pick up something you didn't know. But even more important, if you have friends, family, or business associates, listen to this program and discuss. Because for years and years now, our special guest is a longtime friend, Peter Schiff, and I. We would spend hours upon the real estate guys' cruise lines until COVID hit. And we would debate this thing. I mean, Peter and I are on the same team, but we don't always agree on what we do about it. All these years we've been saying buying gold and silver. Peter does not like Bitcoin. I like Bitcoin because we're buying it at 6,000. Our entry point is still in the money. Just like my gold price is $50. So I'm in the money, and today gold is at 1814. Today is, I think, January 18th. So there's a lot to learn. It's not about just buying something or selling something. It's what you know about the product. And Kim and I, my first real estate deal was $18,000. Your first real estate deal is how much, Kim?
$45,000. Had to come up with a $5,000 down payment.
Yeah, so but we can't live there anymore because all things have changed. So we have Peter Schiff. He's really, I do subscribe to his podcast. I mean, he's fantastic. His information is priceless. A bit opinionated, but it's priceless. You know, he gets attacked by all the Bitcoin hodlers, as he calls them. I think it's funny personally. They argue and argue and argue. But anyway, and I do invest with Peter, but we don't always agree. And I think the most important thing now, you should have been listening to Peter Schiff and me a long time ago, and you should have bought a lot of gold and silver, started your own company. But today it's different. Like, and I was saying, for Kim and I right now, because we have not followed the traditional go to school, get a job, put your money in a 401k, the problem today is too much cash, exactly as Peter says, and that's inflationary. I mean, Kim and I have properties right now that have gone up about 20 times, and we're going to sell, but the problem is, where do we go with our money, right, Kim?
That's the problem. That's the problem because there's too much money chasing too few opportunities right now.
Yeah, and it's the most dangerous time. In many ways, it's the most dangerous time because you might do something even more stupid because you don't want to get back in the market. So Peter's recommendation is go to stocks outside the U.S. That's good if you know what you're doing. Well, we don't. So anyway, with that said, I'll let Kim start. Kim, what do you want to say?
Well, first of all, to Peter's podcast, if you want to go to Peter's podcast, and it is a really valuable show, it's shiffradio.com. Shiffradio.com is Peter's podcast. And I want to say this is that I know we're looking at, what else can we do? What else can we do? But I do want to acknowledge the two of you because you have been saying for years and years and years, buy gold and buy silver because that's real money. And so people would laugh and people would say you're crazy and this and that. But that is, I think, a good answer today, given that money is going to be worth less and less. And so I think you guys were right. And as Peter said, it looks like it's going to get worse. So maybe this is the time to buy more gold and silver. And that's what I want to kick it to Peter with.
Yeah, it's certainly not too late to listen to us. In fact, it's better to listen now because you could have stayed in the casino that the Fed created all these years and made a bunch of money in tech stocks or cryptocurrencies, and you could take your chips off the table now and you could buy a lot more gold and silver than what you could have bought had you bought it 5 or 10 years ago. There's no question about that. But Peter, I think you're really pressing your luck if you stay in that casino.
Yeah, Peter, may I support you right now because I think it's coming. I already see it. There's so much money floating right now. If there's hyperinflation, my generation, a boomer generation, they're toast if they're fixed income. Isn't that true?
The people who get hurt the most are the people who are retired. When you hear the news reports, they always want to focus on wages and whether wages are keeping pace with inflation, which they're clearly not. But at least if you've got wages and they're going up 5% and prices are going up 10%, well, you're only 5% poorer. But if you're retired and you've got a fixed income and, and prices go up 10%, you get stuck with the whole 10%. And, a lot of these retirees have been forced out on the risk curve. They've got all these overpriced stocks that pay no dividends, and those stocks are crashing right now, and their whole retirement is going up in smoke.
That reminds me too, Robert, of that couple. So we have a precious metals dealer that we work with here in Phoenix. And he was telling the story of this couple. They were retired, and every 1 or 2 weeks, probably every once a month, maybe every 2 weeks, they would come in and they would cash in one ounce of gold. So they had a storage of gold and they would cash it in whenever they needed it. And that was their retirement fund and it paid off for them.
It makes sense, right, Peter?
Excuse me?
It made sense for the old guys like me, okay? And they had a stack of gold. And when whatever happened to them, they would just come in to supplement their income. They would be turning...
Well, people can do that now because, and in fact, over time, you'll have to sell less and less gold. Right. Maybe now you need an ounce of gold, and maybe in a couple of years, 1/10 of an ounce will buy as much as an ounce does today because gold's going to go up dramatically relative to the cost of most goods and services. But the problem is, you put your money in the bank, you get no interest.
Correct.
And inflation destroys it. I mean, people want to say gold doesn't pay any interest. Well, 0 is better than -5 or -10, which is what you're getting on your cash.
So, Peter, that would be a strategy for an old guy, old person. They could say, well, maybe I should get out of cash. I mean, cash is still going to be good, but it's going to be declining with inflation. If there's inflation, I'm not saying there is or not. I know there is because I got so much coming in. But one strategy is to go to a hard asset thing. And what do you think is going to happen today? This is January 18th, 2022. What do you ever do a forecast? What you think gold will be like in 5 years?
Well, I think it's going to be a lot higher. I don't know exactly. It's hard to know the exact price that it's going to be. I think it's going to be quite a bit higher, certainly in dollar terms, but also in terms of other currencies. But what you want to do with inflation is recognize that the biggest losers are creditors, people who are owed money and are going to be paid that money in depreciated currency. So you don't want to be a creditor in U.S. dollars. So you don't want to own cash. You don't want to own bonds. You don't want to be in annuities, or you don't want cash value in an insurance policy. You've got to own real things. And that's why I'm buying all these foreign stocks, companies that pay very high dividends. I mean, I'm buying stocks some of them are trading for under 10 times earnings. Many of them pay dividend yields of 5 to 10%. I get that cash. I can spend it. If you're retired, you can use that cash to, finance your living. And as the dollar goes down, the value of those dividends will go up. And of course, the companies that I own, they're all raising their prices now. So they're going to be able to raise their prices. So they're going to have higher earnings and they can pay me higher dividends. So those increasing dividends will keep pace with an increasing cost of living. But a lot of Americans who are in the U.S. stock market, they're collecting no dividends. They just have overpriced stocks that are falling. And if they have money in bonds, the low interest rates that they're earning are completely inadequate. They're being more than offset by inflation. If you're getting 2 or 3% interest and inflation is 7 or 10%, you're going backwards every year. And eventually you won't be able to afford to maintain your lifestyle, especially if you're retired.
Correct. So, Peter, one of the old standard, what I call financial planning thing is you go to stocks and then you shift to bonds.
Paul, we lost the backdrop. Yeah.
And I am not really good at, I don't understand why would anybody put the money in a bond, because I never had any money anyway. I'd rather be the borrower than the bond holder, whatever it is. But
normally people put
what's
money.
What's going to happen to bonds if they keep Q tightening? What happens to a bond?
Well, bond prices fall. Bond prices are falling. Take a look at what's happening. And they're going to keep falling. But the problem is, not only are bond prices falling, but the currencies that they're denominated in are losing purchasing power. So you're just getting destroyed in bonds.
Peter, the reason I want you to say that is because there's so many guys my age, the boomers, they think they're safe in bonds.
No, bonds are riskier than stocks right now. I mean, It's unfortunate because bonds are where you're supposed to go when you want to play it safe, because you're not taking the risk of the stock market. You're guaranteed to get your money back, because the person who you loan the money to is committed to paying you back, and you know what your return's going to be because you have a fixed interest. But the problem is anyone who buys bonds now in this environment is overpaying. The prices are inflated because of the Fed. So you're paying this ridiculously high price for an asset that barely throws off a yield. And as interest rates eventually rise, the price of the bond collapses, but meanwhile, inflation is destroying the value of the bonds, of the cash rather, that the bonds are going to pay you. Correct. So bonds are extremely risky. I mean, people talk about treasuries as risk-free return. I've been calling it return-free risk for years.
The point I want you to make, Peter, is that so many people have in their mind bonds are safe. That's the danger.
Well, they're not. They got to get that into their head. They're not safe.
So what if somebody owns a lot of bonds right now? What should they be looking at?
They should be calling me up to sell the bonds for them. They got to get rid of those bonds, and they got to get into something that is safe, at least relatively. I mean, nothing's safe anymore thanks to the central bankers. So you have to look at degrees of risk. And to me, I think it's a lot less risky to be in foreign equities than U.S. bonds. I think it's a lot less risky to be in gold and silver than in U.S. dollars.
So is one of your strategies in stocks, because you said you talked about dividends, are you always looking for stocks that pay a dividend? Is that one of your primary strategies?
Yeah, I mean, that's one of the ways you know the stock is a good value. You look at the income, just like when you look at a piece of property and you're looking for the cash flow, you're looking at what the rents are relative to cost of operating it. If I own a business, I want to know what my piece of the profits are. What am I going to get? What's my return on my investment? Forget about potential appreciation. I don't care about that. I mean, what if I never sell the stock? What is my return on owning this stock? And that return is the dividend, right? Now, it can also be capital appreciation if the company has enough income to buy back stock and deliver some of my income in the form of capital gain. So you also look at the earnings, because most companies don't pay out all their earnings in dividends. So you still are, entitled to a share of the earnings of the company when you're a stockholder, even if those earnings aren't paid out in dividends. But you look at all these valuations and you determine if that's a good place for your money. Now, fortunately, there's a lot of good businesses around the world that we can own a piece of and preserve our wealth that way. But all of these assets are going to get increasingly more expensive for Americans as the dollar loses value. So people have to act quickly while they can still afford to buy these stocks.
Who did Microsoft buy yesterday?
Well, today they put in an offer for Activision Blizzard, the gaming company. Yeah. They've been the subject of a lot of bad press because a lot of allegations of, sexual harassment or whatever, an unfriendly work environment. And so Microsoft made an all-cash bid, actually. Speaking about companies that have a lot of cash, They're not even buying them with stock. They made an all-cash offer for the company.
That's why, ladies and gentlemen, the reason why I wanted Peter on this show is please start thinking differently, exactly as Apple said, think different. Because my generation is running on that old go to school, get a job, 401k, and retire. You invest in equities, which are stocks, and then you shift to bonds. That could be the most stupid, high-risk thing you can do today. So if you're thinking what worked yesterday will work tomorrow, that's why we're having this show. Any comments, Kim?
Yeah, so I wanted to ask Peter, so you're talking about international growth stocks or stocks, just strong international stocks that pay a dividend. I don't know anything about that. How do I get myself educated about that?
Yeah, well, that's why you got me. That's all I do. I've got all kinds of analysts that work for me and portfolio managers. We're looking all over the world for good investments. The last decade was all about U.S. stock market. The U.S. stock market outperformed the rest of the world because the rest of the world's got value stocks and we've got hyped up momentum in tech stocks. And so the world wanted those stocks. They don't want them anymore. They're getting rid of those stocks. And that's also a big problem for the dollar because we were recycling our trade deficits because foreigners at one point took the dollars they earned selling us stuff and they bought our bonds. But then our bonds became so expensive, the yields were so low, they started buying our stocks. Well, now our stocks are really expensive. There's nothing that we have that they want. The dollar is going to collapse. But in the meantime, we're getting into these foreign stocks. We're building portfolios for clients, managed accounts. All of my mutual funds are loaded up on these foreign value stocks. They're the ones that are going to do really well in this decade. Nothing that worked in the last decade will work in this one. It's a totally different environment. This is stagflation. And the same thing with cryptocurrencies. If you bought Bitcoin, at the beginning of the last decade and rode it up for 10 years, you cleaned up, as well as a lot of these other cryptocurrencies. What's going to happen now is it's a rotation out of fool's gold into the real thing. So now it's time to take your profits in that Bitcoin that you bought a while ago and buy more gold and buy more silver because this is the rotation. It's out of hype into value, and that includes out of cryptocurrencies into real money, into gold and silver.
Okay, once again, this is the Rich Dad Radio Show. We make no recommendations. Peter does. For full disclosure, I do invest with him. I don't always agree with him. We argue quite a bit. When we're in the real estate guys show at sea, it was always the Peter Schiff Kiyosaki show on stage. They didn't have to watch Jerry Springer with Schiff and I on the stage because we always disagreed on something. But anyway, how do they get in? And we're not endorsing you, Peter. I mean, I'm just saying I do invest with you. You're a very smart man. So was your dad. So how do people get in touch with Euro Pacific Capital, or is that how they get in touch?
Yeah, well, it's easy. They can reach out to us on the internet. You can see above my shoulder the website for my asset management company here in Puerto Rico. You can also reach my representatives in the U.S. Through the Euro-Pacific Capital website. Either way, we've got representatives that you can talk to. We can go over our investment strategies, see if they're suitable for you and appropriate, and pick the right one. If you're more of a do-it-yourselfer, all of my mutual funds that we manage are available on all the discount brokerage platforms. All of my funds are very unique in the way we select our securities. It's all about value, and it's about getting out of the dollar and protecting yourselves from a real economic crisis in the United States, because it's coming. We have delayed the day of reckoning for decades now. As a result, the problems are much bigger, so we have a lot more to reckon with. It is going to be a very, very difficult environment financially in the United States. Think about the 1970s, only way worse, much higher inflation, a much weaker economy, and we're starting from a much more vulnerable position. The political landscape is far scarier now. Socialism was not acceptable in the 1970s. Most people would not vote for socialism. Now people embrace socialism. Capitalism has never had a worse reputation, unfortunately, than it does right now. So it's a very dangerous time to be invested in America. And so you just need to do what you can. And I'm helping Americans because I care about the country and I care about my fellow Americans. I don't want them to go broke. And that means they got to get out of U.S. assets now while they can, get out of dollars while they can, and get into these portfolios. And again, listen to my podcast. I Shift Radio on YouTube. I'm talking about these issues 2 or 3 times a week, reporting everything real time. I think things are accelerating now. This is going to be a big year. It's not a year to sit on your hands and wait. You got to take action. You got to protect yourself because nobody else will do it for you.
So once again, thank you, Peter. And for full disclosure, we do not endorse anybody following his advice. Yet we expect you to do your own research on things. Yeah. And for full disclosure, I do invest with Peter.
Ignore my advice at your peril. I think that's the point where we're at.
God. Oh, God. Peter, I'll kick your ass up and down the real estate anytime you want. But anyway, it's just different. There's a million ways you can get rich, and there's a billion ways you can go poor. And so, again, we don't recommend any investments, but I would highly recommend you listen to Peter Schiff. Final words for Peter, Kim.
Thank you, Peter. And I think what you're offering people is a great solution. And what I'm most encouraged by is that you're out there to educate people, and you're not just saying, "Give me your money, I'm going to invest it for you." You're educating them as to what needs to be done in your world. So I appreciate that. I appreciate your frankness, and I love the banter back and forth. And I appreciate
Thanks very much. I appreciate what you guys have been doing as well.
Yeah. Final word, Peter. I mean, I think this is worth mentioning. Who was your dad? I mean, he was a very controversial character.
He to say the least, he was. But he was a very passionate person. Held his beliefs very strongly. Took them to the grave. But really believed in America, in the principles that it was founded on, and very much wanted to see the nation return to those principles. I mean, we're as far away from them as we've ever been. So it's hard to say if my father's dream will become a reality, maybe for my children. I still hope that it will. And I'm doing what I can. That's part of the reason I'm educating people, so they understand what it means to be an American and what it meant to be an American at one time, and understand our Constitution and capitalism and liberty and why these concepts are so important, and why we need to return to them. And, if we're going to bring back prosperity, we're going to have to return to our roots. And so hopefully we will.
And what was your father's book? What you promised to send me?
Well, he wrote a lot of books, but the most controversial and the most recent is The Federal Mafia. We still have a few copies, and people go to shiftbooks.com. I've been signing them. There's only been 2 books in American history that have been banned by the U.S. government. One was called Fanny Hill, and it was banned because the government claimed it was pornographic, which, of course, by today's standards, it's nothing. But then after Fanny Hill, there was my father's book, The Federal Mafia. The government banned that book. But they banned my father from selling it. They didn't actually ban other people from selling it or buying it. So you can still buy it, but there's not that many copies left. at least new copies. I mean, there's, you can buy a used one, and, they're kind of expensive, but I've got some new ones that I've been signing. So
Peter, you promised out of friendship you would send me one, but so far we haven't. I made money in your...
Are you sure? Maybe it's around there somewhere. Maybe I thought I sent you one a while ago.
Okay, I'll go look again. But anyway, it's interesting. I had a rich dad and you had a poor dad, and you had a revolutionary dad. You were outspoken dads. And I think that's the most important thing for parents and people today is be careful who you take your advice from. So if I'd followed my poor dad's advice, I'd be an employee right now and thinking if I had a college degree, that was enough. But my rich
unfortunately,
dad,
my son doesn't follow my advice. He's buying Bitcoin.
So anyway, Peter, thank you for the years and years of friendship, and please subscribe to the Peter Schiff advice and things like that. But again, we make no recommendations. It's just that Peter's a very wise man and started with his father. Thank you, Peter.
All right, thank you, guys.
When we come back, we'll have a final conclusion for the Rich Dad Radio Show. Thank you.